What's up, what's up, what's up, man? We are continuing this series on real estate. We have different conversations in the past. We talked about the real cost of owning real estate. We talked about my love and how I got started with it. You know, we had multiple different conversations regarding real estate. And right now, I want to touch on strategies and how people can tap into the real estate game strategically due to things that's going to impact them and their family moving forward. And it's important to have this real estate strategies discussion because everyone can tap into real estate a little differently. It's not a one, size fits all kind of game. You have different things that you can do depending on what, the place that you're in right now and ultimately what you want to do long term. It's all based on your needs, your, what you do well and how you want to invest, right? So first and foremost, the wholesaling game is what a lot of people do when they start, and how they get started is they start wholesaling first, which can be defined as driving for dollars. People will drive around trying to find distressed properties, distressed owners that want to sell their homes, make an agreement to sell a house at a certain price and then wholesale it, basically contract it to an investor that's willing to take the property on at a higher price and take the proceeds as what they receive on the back end, right? So I'm definitely not a wholesaler. I have met a few wholesalers. I understand it, but that's how people enter the game, and they try to accumulate money so that they can then invest in the properties, but they start off with the wholesaling. You're not using any of your money. You ultimately making a deal, finding deals, making a deal, and then selling that deal off to someone at a higher price to ultimately make money. So that's wholesaling, right? So let's talk about number two, which is fix and flipping. A lot of people start off with this game because it is a way to make money quickly. You buy a house at a very, very low price. You find distressed property that need to be fixed up, abandoned properties, worst property in the neighborhood, as people will say, and you fix it up. You then, sell it to make a profit, right? But the big thing in this is you got to know what the after repair value is, the ARV. If you're buying at 100 and you know that after the repair is going to be worth, let's say 200. You then know that you have to put in, let's say, $50,000 into the property. Then you basically, looking at a $50,000 profit, all in all, if that's the sell of the property, right? So fixing and flipping is a lot of, way people get into things, especially when it comes to cities and, areas that have a lot of abandoned homes, a lot of, houses that's not been kept up, that's not been taken care of. Fixing and flipping is a way to strategically place yourself when it comes to the real estate game, and how to accumulate funds, right? Just taking consideration when it comes to fixing and flipping, every time you have a sell, right, you got to pay taxes, right? Capital gains tax. So, I try to stay away from taxes. That's just not something I want to deal with on a consistent basis. So fixing and flipping is not my strategy, but I know a lot of people that do it, and they do it well, and they make a lot of money doing it, right? So fixing and flipping is an option, right? So let's go to another one, the BRRRR method. This might be my favorite, and one that I will continue to progress in moving forward. The BRRRR method, right? Is B and 4 R's. So you have buy, which is the B. Buy. You have 1 R, which is then repair, which you buy a property. You buy a similar to the fixing and flipping, but you're buying it. You're not flipping it. You are repairing it. You're getting an ARV high by the repairs. You're then renting it out to somebody. So this is a mix between buy and hold and fixing and flipping. You're repairing it, you're renting it out, then you're refinancing it, right? So again, if you buy a house let's say at 50,000, you're repairing it, you put in 25,000 into it. You know that the after repair value is 100, let's say 150, right? So you're renting it out after you repair it, you're refinancing it, you getting that so you put in 75, you know it's after repair value is 150, you're refinancing it at 150, you're getting $75,000 out of it, and you're repeating that process. So buy, repair, rent, refinance, repeat, and you just continue that process, right? The reason why this is effective is because we talked about taxes when it came to the fix and flip side of things, but when you refinance, right, you take that, you don't pay taxes on debt. You don't pay taxes on debt, right? So this is the layered conversation and the advanced level discussion. You don't pay taxes on debt. You refinance that money, you take that money, and then you put that money into another investment. So if you do this 2, 3, 4, 5 times, you will then accumulate a level of assets as well as wealth long term that can really build a portfolio pretty quickly, right? So the BRRRR method is probably my favorite. And as we continue to move forward in our financial journey, meaning myself and my wife and my family, we definitely will take advantage of that BRRRR method. Last but not, well, it's not the last one, but another option, which was what I do currently, which is the buy and hold method. You're just buying houses. I try to get turnkey properties. I don't like to make a whole lot of repairs. I'm not a repair guy, right? I'm an investor from the standpoint that I want to buy a turnkey property. Turnkey basically means that when you turn the key and you open that door, you don't need to make any repairs. It's already been repaired, right? So I buy turnkey properties and at good prices, and I rent them out. Buy and hold, not selling nothing, not selling no properties. Don't ask me if I'm selling my properties. The answer is going to be no. I'm buying and holding every property for at minimum at least 10 years, right? For the most part, you don't get the benefits of ownership unless you are thinking long term. I'm gonna repeat that again. You don't get the benefits, the real benefits of ownership, asset appreciation, depreciation on taxes, cash flow long term, wealth building. It's all based on long-term strategies, holding long-term, right? So buy and hold method, you buy and you hold that property, you make the repairs when you need to, obviously, you build that passive income threshold, and you take advantage of that long-term appreciation and ownership of that asset. Lastly, let's talk quickly about REITs, real estate investment trusts. You can invest in those if you don't want the hands-on aspect of real estate. You can invest in real estate investment trust via the stock market, in which they pay you good dividends of investing in that trust, and you can make passive income via dividends on your investment account through your stock market portfolio, right? So there are some that don't want to deal with the hands-on aspect of owning real estate, of the asset when it comes to the properties, dealing with people, dealing with contractors, tenants, things like that. They want to just do it from a passive side of the indirect approach, which is ownership of real estate investment trust, and they receive a 4 or 5, 8%, whatever the percentage dividend yield is for that trust. They get that via the stock market, and that's how they invest in large scale multifamily trust accounts, right? I almost forgot. House hacking. Love it. Absolutely love the house hacking investment strategy. And this is for all of my single. If you single, you don't have no children. If you are in your 20s, if you just starting off in the game, you don't own any real estate, and you want to start off with a level of home ownership and investment at the same time, house hacking. House hacking can be defined easily as you buying a multifamily property, a duplex, triplex, quad, and you are renting out, you're living in one unit and you're renting out the other units. This is massively a successful strategy. Buy a duplex, live in one unit, rent out the other unit. If you know how to use different types of how to buy it, right? You use a FHA loan, a Federally Housing Authority loan, FHA loan. You only got to pay 3.5% down. You do got to take an advantage. You have to take in consideration closing costs being about 3 to 5% on top of that 3 to 3.5% that you put down. So in all, you need close to 10% of that purchase price available for you to make that purchase on that property. All of these discussions and what we talk about the calculations and how we plan is so important, because you have to take all of these things in consideration before you're investing, right? So I'm gonna buy a duplex. Let's say I'm 24, right? I'm gonna buy a duplex and I'm gonna rent out one unit. I'm gonna supplement that income to pay my mortgage. All of the money I make from an income perspective is mine. It's my savings. It's my stock market investment. It's my continuing to grow towards buying another duplex. I only got to live in it for a year using the FHA, the federal loan. I do it again. I buy a triplex. I live in one unit. I rent out the other two. I refinance my property that I had with the FHA loan, the first property. Now I have 2 units at that first property. I got 2 more units at the triplex, and I'm ultimately living in one. I do it a third time after another year. Now I got 5 units. Now I'm living in another duplex or a triplex or a quadplex, and I'm just repeating that process. If you house hack 2 to 3 to 4 times over a 3 to 4 to 5 year span, you could build up a portfolio large enough and a passive income portfolio large enough that it can supplement your daily expenses. And whatever job that you have is all money coming into your pocket. You don't have to worry about nothing. But this strategy takes a lot of, it's so intentional. You got to be disciplined. You got to be very strategic. And you got to be committed to the long-term process of owning these assets, right? It's not comfortable being a landlord and you living in one unit and you got to rent out to someone else that's next door to you. It's not a comfortable thing. Right? And if you have a family, it's very uncomfortable. But that short-term sacrifice can ultimately impact you long-term so much that in 5 years you could be a millionaire from an asset perspective and growing your net worth for the long term for the rest of your life. So house hacking is so important and so effective. So we just talked about a few different investment strategies when it comes to real estate. We talked about the buy and hold method, REITs. We talked about fixing and flipping, the BRRRR method, house hacking, and ultimately wholesaling. Right? The big thing here is choosing a strategy that works for you. Do your research, plan, be intentional, be consistent and disciplined, and take advantage of real estate out here and progress yourself forward, man. Right? So for me, in my strategy, I'm buying and holding. I'm buying properties every year or two. We're going to continue to build this portfolio. Once we get to about 5 to 7 different properties, I mean, we're going to tap into the multifamily space also, but I'm ultimately long-term looking into the commercial real estate space, looking at small to medium-sized apartment buildings, 30 to 50 to 75 units, and ultimately in the future, 100-plus unit buildings, so that we don't have to work. We can continue to invest in the real estate game and build a passive income that can provide financial security, stability, and ultimately freedom long term. Love you guys. I appreciate you guys. Keep tapping into the channel. Subscribe to the channel. Hit the like button. Leave me a comment. What investment strategy are you preparing for right now? What are you currently doing? And let's continue to progress on this financial journey. Peace.